Good evening, Cranford High School. Thank you very much for coming out tonight for college financial aid. All right, very exciting topic here. No, but we're going to try to keep it as light as possible. My name is Matt Mulhern. I'll be your presenter tonight. Hopefully a little bit of entertainer as we go through this process. A little quick background about myself. I've been in the college aid financial services for about a decade now. I think this is my 11th year helping families navigate the college financial aid process and the ever-changing nature of the college financial aid process. Pretty well versed in most situations, most colleges, etc. So I've been doing this for quite a while. Tonight, what we want to do is take it through the whole college financial aid process. And really, if I do my job well here tonight, help you get a much better idea of how the process works, right? So I'm here with a company called College Aid Pro. As you can see, our mission is student by student, family by family, help end the student loan crisis, right? And that really starts with education, right? And helping families be smart consumers as they navigate this college process, right? As we get going, the logistics before we dive in here. Firstly, this will be recorded, right? The entire presentation will be recorded. As long as you register tonight, whether you're able to tune in for the whole thing or just a portion, you'll get an email tomorrow with the recording and the slides so you can go back and check it out at your leisure. I'm sure you want to watch this replay over and over again. Hopefully I'm not good. So you will get that tomorrow. Also, as we move forward here, feel free to make this as interactive as possible, right? Ask whatever questions you want. I'm going to ask that you don't use the chat box, right? I ask that you use the Q&A box rather than the chat box. It'll help me answer questions as we go. Also, listen, I can't, obviously we invited the entire junior class here tonight, so I can't answer any specific questions specific to your family. At the end of this, I'll give you some resources that you can utilize to best answer those specific family questions that you have. But feel free, ask a question and I'll answer as many as we can here, right? All right, so diving in, here's me, right? I'm your presenter tonight. There's my email, Matt Mulhern, mattm@collegeaidpro.com. And there's my phone number if you want to give me a buzz. All right, so the college financial aid process. What is it about? It's very much misunderstood, right? And there's a lot of information out there, but unfortunately, there's a lot of misinformation. And the misinformation, a lot of the times, it's not intentional. It's just that you have to understand that this process is very family specific and it's very school specific, right? Every family is in a different financial position, and each student has a different academic profile. And then each college, a very important concept to grasp, each college is their own business, right? And they all operate differently. So you have to understand that this is a very individualized, both family process, specific to your family, and then specific to each college. So you take, how do I know, how do I understand where my family fits in? And then how am I supposed to know how individual schools do business? Like I said, I've been doing this for over 10 years. And our answer to those questions, what was the impetus of the creation of this College Aid Pro MyCap software? So hopefully everyone that registered tonight was able to set up an account. You could follow the link there and you can set up a completely free account now. And I'm going to take you through some of the ins and outs of that. It's a really powerful tool, really to help you get accustomed and start to understand where your family fits into this high-level process. Before we dive into that, the first place that we want to start is by understanding when it comes to college financial aid, what's available, right? What type of aid is actually available, okay? So when it comes to college financial aid, there's actually three different types of aid that's available, right? There's need-based aid, there's merit-based aid, and then there's what they call self-help aid. Self-help aid are what I call the least helpful, right? Self-help aid are loans, self-help aid or work study, right? A part-time on-campus job. For my money right now, assuming the majority of you guys are class of 2024 juniors, you're really not focused on the self-help aid. The loans will be there. Trust me, they'll be there. You'll be able to take loans, and there's some pros and cons to different loans, but that's not really the focus. What I want to help you guys do is understand how the process works and how to lower your cost, right? We want to get your cost down as low as possible. And you really do that through two different vehicles, need-based aid and merit-based aid, right? So diving into need-based aid and merit-based aid, need-based aid is all about the family, right? And so need-based aid is much less understood. Merit-based aid, on the other hand, is all about the student, right? Merit-based aid is all about the student, their GPA, SAT, academic profile, their extracurriculars, if they're an athlete, if they're an artist, right? Merit-based aid is synonymous with the word scholarship, right? Your son or daughter's awarded a merit-based scholarship. The school says it's basically a financial incentive to go to a school. The school says, look, we really like this kid, right? We're going to offer them a financial incentive to come to our school, a merit-based scholarship, right? We all get that. We all intuitively understand merit-based aid, right? The other type of free money that's available is what we call need-based financial aid, right? Now, need-based financial aid, trust me when I tell you, is much, much less understood, right? So need-based aid is really the opposite of merit in a sense. So we said merit's all about the student. Need-based aid is all about the family, right? It's all about the family's income, the family's assets, the number of people in the household, right? It's essentially when you fill out the financial aid applications, you are applying for need-based financial aid, right? So that's your two buckets of available aid to lessen your costs, right? To reduce your sticker price. Now, important concepts to understand here when it comes to merit-based aid. Some schools are much more generous with merit-based aid than others, right? In fact, not every school gives merit-based awards. The Ivy League schools, for example, Harvard, Princeton, Yale, right? The NESCAC schools, right? Amherst, Bates, Middlebury, Colby. They only give need-based financial aid, right? You can't get a merit scholarship at those schools, right? And then need-based aid, some schools are very generous with need-based aid, other schools not generous at all. Again, an important concept that I want you guys to understand is that every college is their own business, right? And they all operate differently. So we say, okay, we understand the three buckets, self-help aid, that's loans, that'll be there. That's not really the focus tonight. The focus is lowering our cost as a family, right? Lowering our cost as a family. And how do we do that? Either need-based aid or merit-based aid, right? So again, merit-based aid we get, my son or daughter applies to a school that gives merit, they offer them a financial incentive to come to our school, a merit-based scholarship, we get that. How about need-based aid? What do I need to know about need-based aid? One, is my family going to qualify, right? And two, if I do qualify, right, how can I determine how much need-based financial aid my family will receive? Boom. Okay, so every college in the country, right? So we're going to start with need-based aid, and I'm going to break this down for you. Then we're going to move on to the kind of specifics of merit, right? So need-based financial aid, right? So again, is my family going to be eligible for need-based financial aid? And if we are, how much are we going to qualify for? So every college in the country uses the same formula or the same equation to determine your eligibility for need-based aid, right? COA minus EFC equals need. So let's break that down together. So the COA is this big, scary sticker price, right? Room, board, tuition fees, your all-in cost. 60, 70, 80, some schools approaching 90,000 bucks, right? Scary numbers, honestly, right? So they take the sticker price of the school. They then subtract what's called your EFC. If you guys leave with an understanding of only one thing tonight, right? Hopefully one is that I'm good at this and you enjoyed it. But two, more importantly, obviously, you understand what the EFC is because it's that important, right? It's that important. The EFC stands for the expected family contribution, right? The expected family contribution. It is an actual dollar amount that is assigned to your family, right? It actually, if anyone's ever submitted a FAFSA before, right? You input your student info, parent income and assets, you click submit. When you click that submit button on the FAFSA, they actually spit you back your EFC and you can find it, right? It says your EFC is, and they disguise it to a degree. It has 3 zeros and then it gives you a number. That's your federal EFC, right? When you submit the FAFSA, you can find it. That's the minimum, that's like the baseline amount that a school expects you to pay. Now, we're going to talk about that a lot. That's not all you're necessarily going to pay, right? But that's the minimum amount, right? So again, this is the formula to determine your eligibility for need-based aid. So they take the cost of attendance, right? They subtract your family's EFC, and that equals your eligibility for need-based financial aid at a particular school. So just to give you round hypothetical numbers, the cost of attendance is 80,000 bucks. Your family's EFC, right, is 30,000. They go 80 minus 30. So you're eligible for $50,000 in need-based financial aid at a particular school. Now, very important to understand, just because you are eligible for need-based financial aid at a school does not necessarily mean that's what you're going to get. Right? Why? Because like I said, every school is their own business. They all do business differently. There are some schools, right? NYU, Columbia, UPenn, that every dollar you're eligible for, so in this scenario, 50,000 bucks, they will give you $50,000 in grant money, right? They will give you every dollar that you're eligible for. That's how they do business. That's their business model. That's how they meet need-based financial aid. There are other schools, right? And this is not calling them out, but Penn State, Maryland, and I'm going to show you specifically the examples. Just so we'll put Penn State in here, right? Out of state, Penn State, sticker price 60,000 bucks. Your EFC again is 30,000. You go 60 minus 30. At Penn State, you're also eligible for $30,000 in need-based aid, right? We said NYU is going to give you all $50,000 that you're eligible for. Penn State, you're eligible for $30,000 in grant money, but guess what? You know what they're going to give you? Zero. They're not going to give you any need-based aid, right? Why? Because that's how they do business. They don't give any need-based aid. They're going to say, go take a loan. Again, very important concept to understand. One, every college is their own business. Two, you really have to get an idea and understanding of what your EFC is, right? Family specific is the EFC. And then three, school specific. How does that school do business? And you might be saying, okay, we get the concept. We understand. We want to figure out what our EFC is. But one, how do we know what our EFC is going to be, right? And then two, once we know our EFC, how do we know what that means at a particular school? And again, I've been doing this for over 10 years, and those are always the questions that we receive. So we developed the software to basically answer those questions, right? So let me show you an example. And hopefully most, if not all of you, received the link to set up your free MyCap account. And so you can go, you populate your info. So this is my hypothetical account here, right? Matt Jr. And what the software does is tonight, you can input your information. And right now, you can see your EFC, exactly what the FAFSA was going to give you come October, right? Why does this help you? Because you can now begin to start planning and understanding the schools that you're currently interested in. How much are they going to cost me, right? How much are they going to cost my family? What is my financial expectation at this school? For better or worse, you want to know what that's going to be. So a lot of times this cost process is unlike anything else, because the sticker price of the school does not necessarily dictate how much you're going to pay, right? It's not really a starting point. It's about what is your family's EFC, and then how does the school do business, right? So you can see in this, for this particular family, right? They have an EFC of 25,000 bucks, right? Boston University, big scary sticker price at 86,000 is going to cost less than in-state Rutgers, right? $28,000. Columbia, huge sticker price, 86,000. It's going to cost this family $28,000, right? They're going to give them 60 grand in grant money. How about Penn State, right? My EFC is 25, they cost 60. They should be giving me $35,000. Is that what they're going to do? No. Why? Because that's how Penn State does business, right? So even though you're eligible for aid at Penn State, right, you're not going to get any. Again, Syracuse private school, right? Another popular school, out-of-state public school. They have a sticker price of $55,000. Again, like Penn State, they're not going to give any need-based financial aid to this family, even though you're eligible for it, right? This software is very powerful and recommend. It's completely free. Set up an account. And again, what do you want to start doing now? And I should have led with this, but I get this question. I actually got this question today from a junior family, class of 24. Is it too early, right? Is it too early to start planning and researching colleges? Absolutely not, right? Absolutely not. Again, what you want to start to do is understand what your EFC is going to look like and how that relates to particular colleges, right? Again, every college has a different business model. And what you ideally want to do is apply to schools that are going to give you the most money, right? And this software does a great job of helping you understand that, okay? I'm going to come back to this and give you some more specific examples in terms of the things that we talk about in relation to the EFCs. But hopefully now we get an understanding of kind of what's available, right? So the EFC, this is need-based financial aid, all predicated on your EFC. And we're going to talk about merit in a second. So let me stop here, pause for a second. And if anyone has any questions just relative to the EFC, fire away. Happy to answer as we set up for the next slide here. All right. So hopefully we all have a pretty good understanding of how the need-based formula works and how important that EFC number is and the importance of understanding your particular family's EFC, right? So what do we need to know about our EFC? What components, what factors make up the EFC? Right, when we go to fill out the financial aid applications, what do we want to know about? Now, obviously, you're not going to do this, again, assuming most of you are class of 24, junior families, Again, absolutely great. You have time on your side right now to start planning, but you're not actually going to sit down to fill out an application until October. But what you want to start to do is actually understand what's considered and what's factored into the EFC. And if there are any potential moves you can make, you want to understand that as well. Right? Let me just see. Yep. So 529s we're going to get to in a second. Actually, right here. So I'm going to start here in terms of what do we need to know about our EFC? And again, these are the factors that go into creating that EFC for your particular family. So parent assets versus student assets. So when you go to fill out the financial aid applications, they're going to ask you the valuation of your parental assets. They're going to also ask you the valuation of student assets, right? Ideally, when you go to sit down come October and fill out the financial aid applications, ideally, you do not want any assets in the student's name, right? Why? Because when that EFC is factored, right, parent assets are factored in at a much lower percentage than student assets, right? In other words, $20,000 in student asset is going to increase your EFC much more dramatically than $20,000 in a parental asset, right? Now, again, a lot of times you don't even have to do anything. You just have to understand the rule. If your son or daughter has 5, 10, 15,000 bucks in a local checking or savings, 9 times out of 10, your name and social as the parent is on that account, right? It's a joint account with you as the parent. That is considered a parental asset for financial aid purposes rather than a student asset. And again, that's what you want, right? Again, why? Because if you report that $20,000 as a student asset, your EFC will be increased much more dramatically than if you report that $20,000 rightfully as a parent asset, right? So again, ideally, you don't want any assets in the student's name. 529s, I just got the question, 529s. This is a mistake I see every year. In fact, I saw it last week. Someone said, Matt, can you review my FAFSA? I feel like we made a mistake. We didn't get as much as we were expecting. A couple key things I look for immediately, right? Within a few seconds, you can tell. So I go and I look, and they have reported in the student assets, right? They have $50,000. First question, that $50,000 in student assets, is that a 529? They said yes. I said, you filled out the FAFSA room, right? 529s, right? If you have a 529 plan, pay attention. 529s are by rule parental assets. Right? 529s are parent assets. They are not student assets. It's counterintuitive, right? We say student's the beneficiary. It's going to be used for the student's education. It's their asset, right? Wrong, right? 529s are parent assets and are reported as such. The parent is the custodian of the account, right? The student is the beneficiary, right? So 529s are reported as parental assets. And again, that's what you want, because $50,000 in parent assets is going to increase your EFC much less than $50,000 in student assets, right? It's a mistake that's made countless amounts of times. I say it every year. So don't inadvertently drive up your own EFC by misreporting your 529, right? What's an asset, right? What's an asset? What do they factor into assets, right? When we talk about the EFC. So it's basically everything but, right? Everything but your retirement account. Right? So if you have a qualified retirement account, IRA, 401k, 403b, Roth IRA, anything in a qualified retirement account is off the table for financial aid purposes, right? It does not go on the FAFSA. CS profile will ask you about it, but it's not a factor, right? So anything in a qualified retirement account is off the table for financial aid purposes. Again, on the FAFSA, they're going to ask you the 3 boxes when it comes to assets. They're going to ask you the value of cash savings. Then they're going to ask you the value of your investments. I've had families in the past report their entire 401ks as investments, right? Shot their EFC through the roof. Not only are you filling out the FAFSA incorrectly, right? You're inadvertently driving up your own EFC, which could potentially cost you tens of thousands of dollars, right? I've seen it countless times, right? So again, 529s, parent assets, and anything in a retirement account is off the table. Everything else is essentially fair game, right? Cash savings, a brokerage account, anything of that nature is fair game as far as the EFC is concerned, right? Okay, so UTMAs, right? Uniform gift to minors. UTMAs are unfortunately student assets, right? They are student assets, and they're supposed to be reported as student assets. They were in vogue 20 years to 25 years ago or so. They're much less popular now. for the reason I think that they are student assets, and those UTMAs are going to drive up your EFC because they are supposed to be reported as student assets rather than parental assets. That's the beauty of the 529. I would, if I had a UTMA, not giving anyone financial advice, but I would see if I could get that money out of the UTMA potentially, because that UTMA is a student asset. Okay, so how about debt? Is debt considered? You say, Matt, we live in New Jersey, where the highest tax state in the country. Our property taxes are through the roof. I got 3 kids. They all play soccer and hockey and extracurriculars, etc. I have 2 cars, car payments. For the most part, schools don't consider most of that. Any what they call consumer debt, your property taxes, your cost of living. There's really no cost of living adjustment. Some schools will say that they do, but they don't. It's unfortunate, but it is what it is. And I get it. You're not helped by living in the state. I live here too. They're not going to consider debt, and they're not going to consider your high cost of living in New Jersey either. Now, that being said, there are some mitigating circumstances that schools will consider. If anyone's ever filled out a FAFSA before, you know that it's just numbers, right? There's no room for circumstance or situations or context or explanations. You just present your numbers. So if you do have a mitigating circumstance that you want a specific college to be aware of, the burden is on you to reach out to the college and let them know about it, right? They're not going to ask you about it. You have to be proactive and let them know. Again, if you tell them, that you have consumer debt, credit card debt, property taxes, for the most part, that's not going to be anything that adjusts an award. Some things they will consider, right? If you pay high school or elementary school tuition for another child, if you take care of an elderly parent, things of that nature, significant medical expenses, right? Those are some things, some mitigating circumstances some schools will take into account. They're not going to ask you about it. It's up to you to be proactive. But for the most part, debt, specifically consumer debt, does not work in your favor. How about our house? And so this is always one of standing confusion, how your house works, right? If you own your own home, or any home really, and you are applying to private schools, right? Private schools, or maybe applying to private schools, pay attention here. So your primary residence, the house that you live in, is irrelevant on the FAFSA. Your primary residence is off the table. They do not ask about that on the FAFSA at all, okay? So the house that you live in is not reported on the FAFSA. It does not matter. However, right, there's always however. There's 200 private schools in the country, the Ivy Leagues, Penn, BU, Northeastern, that in addition to the FAFSA, require an additional financial aid application. I'm going to talk about it in a couple slides. It's called the CSS profile, right? Again, it's required by 200 private schools in the country, mostly private schools. They are going to ask about your house, right? And what they want to know, or what they're going to ask you, is what year did you buy it? How much did you pay for it? And the 2 key questions are, how much is it currently worth? And how much do you owe on it? So what they're concerned about, these 200 private schools, is the amount of equity in your primary residence, right? Equity being the difference between what your house is worth and what you owe on it, right? So theoretically, if I have a house that's worth $500,000, I owe $200,000, right? I have $300,000 in equity. For the most part, these 200 private schools are going to treat that home equity the same as they're going to treat a 529 or cash, right? They're going to treat it as an asset. It's not fair. I get it. And again, living here in New Jersey, you get screwed a little bit. Absolutely. But be aware of it, right? It's part of the application process. It's part of your kind of assessment at those private schools, right? They do take that into consideration when factoring in your EFC. So how can we mitigate that to some degree? We can choose how we value our home, right? And it's counterintuitive. We always want to think of our home being worth more. Not in this case, right? We want to value it to the lowest reasonable number that we can get to, right? Again, the less equity we show, the less that will count and factor into our EFC, right? All this is about lowering our EFC as much as possible. So we subscribe to the IRS quick sale rule, right? And it's actually in the tax code. Basically says, if you have to turn around and sell your home tomorrow under duress, you can expect to receive 20% less than market rate. Going back to my example, right? My house is worth $500,000. I subscribe to that quick sale rule. So now I'm going to value my house at $400,000, right? So instead of showing $300,000 in equity, now I'm showing $200,000 in equity, right? So that might not seem like much, but at a school like UPenn or NYU or BU or Northeastern or Syracuse, you're talking potentially about thousands of dollars per year in the amount of money they give you or don't give you, right? In need-based financial aid. So it's significant. So you want to do as much as you can to mitigate your equity and reduce your EFC as much as possible. Now, if you own any other property, a second home and investment property, again, it's the same thing. They're not concerned with cash flow, right? What they are concerned about and what they're valuing is the equity, right? So if you have any other property, you can use this quick sale rule as well. And again, it's all about decreasing equity, right? You want to show as little equity as possible to keep your EFC as low as possible, right? So let me show you back to the software, quick difference here. And I've made two scenarios. Yeah, so when you look at these EFCs, there's actually 3 different types of EFCs, believe it or not. And I don't want to get too far into the weeds of it, but I want to show you the difference. So you see the federal EFC here, $25,000 for this family. The federal EFC is derived from the FAFSA, right? Little mnemonic device, right? FAFSA federal. The federal EFC is derived from the FAFSA only, okay? Which again, on the FAFSA, your house doesn't, your primary residence does not matter. However, these 200 private schools, right? A Syracuse, what else? A Columbia, a BU, they don't use this federal EFC. They use either this institutional or the consensus used by about 35 schools in the country. So it doesn't really touch that many, but this institutional EFC is used by most of the 200 schools that require the CSS profile, right? So the reason that this is 25,000 for an EFC and this is 30,000 is because this 30,000 takes into account this family's home equity, right? That's why this institutional EFC is higher than this federal EFC, right? So again, just illustrating the difference between the FAFSA and no home equity and the institutional EFC, the CSS profile and home equity, right? At a school like BU, that $5,000, it's $5,000 less per year that you're going to receive. And obviously as the equity increases, so too does the EFC, right? So again, you want to minimize that as much as you can. All right, let's pause for a few questions here. Yeah, should a home equity line of credit, even if not drawn, be counted as debt against the home value? Yeah, great question. I love the thought process. So firstly, let me say I'm not giving any advice, but maybe, right? Yes, without giving you firm advice, and I have to see the different scenarios, but make it work for you, not against you, right? The College Aid Pro is the website College Aid Pro. Yes, where can we plug into different schools? Yeah, so I'm showing you my account, right, that I created for myself in the College Aid Pro website, right? There's the website, mycapcollegeaidpro.com. You can go, you got to input your profile information, your income, assets, etc., and then you'll see the search bar where you go to add schools. It's pretty intuitive, pretty straightforward. So you can go ahead and do that now if you want. And then inherited money, yeah, money's money, right? Assets are assets. Your money's inherited. So if you have inherited money, the only thing there, and again, I don't want to get too specific, but if it's an inherited IRA, right? If it's IRA of any kind, inherited or not, it's off the table because it's retirement. Anything else is fair game, right? Anything else is fair game. Okay. All right. So that's the asset portion here, right? The asset portion of what we were talking about. And if I sometimes forget to go back and share. All right. So that's the assets, right? So again, kind of key takeaways, understand how 529s work, their parent assets, retirement accounts aren't included. Your consumer debt is not considered. Your cost of living is not considered. And we want to value our house as low as we can get to, whatever, as low as reason. All right. So that's assets, right? How about income, right? How about income? So when it comes to income, we want to talk about the base income year, right? What is our base income year? Basically, the base income year is the tax year that the college uses, right? So again, assuming most of you guys are class of 2024, they are going to use your 2022 tax return, right? The tax return that you're about to file or already just filed, that's going to be your base income year for class of 2024, right? Any sophomore families, class of 25, they're going to use your 2023 tax returns, right? So if you're a sophomore family, you're saying, I got plenty of time. Yes, but right, understand you are now in month 3 of your base income year. Right? And sometimes that it depends on your family. Sometimes that matters, sometimes it doesn't. If you're a W-2 worker, you're going to get paid where you're going to get paid. If you're a small business, self-employed, if you can control your income in any form or fashion, you may want to consider that, right? To reduce your income in the base income year, because obviously the less income that you show or have, the lower your EFC is going to be. Pretty straightforward. We pretty much understand that. What income line do they use? It's line 11, and I'm pretty sure it's line 11 also on 22, although I'm not positive. It's definitely on 21, but it's the AGI. It's the adjusted gross income. That is the income figure, right? That's your key income figure. It's the AGI, the adjusted gross income. right? So that's the one that most schools are going to focus on. And then you see here, students' income allowance. So this happens all the time. Do not confuse this with assets. If the student has $7,000 in assets, they're all going to count, right? But if the student has $7,000 in income or below, it does not count, right? So in tax year 2022, your son or daughter had a part-time job, right? They made $4,500. Great. Tell them go make 3,000 more or 2,500 more, because that won't affect your financial aid one bit, right? Once you cross that $7,000 income barrier, now that money starts to be a factor into your EFC, right? But for 2022 student tax return, anything less than $7,000 in income or below is not a factor, right? So that's income, right? That sums up income. So I covered the income and assets there. Any questions with any of that, fire away in relation to income, in relation to assets, in relation to the EFC. All right, so hopefully you're understanding how important the EFC is and the mistakes and high-level strategies that you can implement to get your EFC as low as possible, right? And again, it's very important that each individual family starts to get a handle on what is their EFC going to be, right? Because again, I know I'm being repetitive, but I think it's worth repeating. You have to understand what your family's EFC is going to be, right? Obviously, no two families' financial profiles alike. Quick word on 2022. 2022, you have to use that. If you're class of 24, you have to use that tax year, for better or worse, right? You have to use that tax year when you fill out the financial aid applications. But say in 23, you have a job loss, right? Or you took a big hit in income or whatever the case may be. In 2020 to 21, we had a lot of COVID IRA distributions, right, which show up as income. Again, you have to use the assigned tax year. However, once you get admitted to a school, you can initiate an appeal process and basically go back to a specific school and say, you use 22 as my tax return to assess our family financial need, but that doesn't accurately reflect our family's current finances, and basically ask for an adjustment of the EFC, right? But you can't actually adjust the FAFSA or the CSA profile. You have to use the numbers on the tax return that they require. Right? Okay, so again, thus far, we've primarily talked about need-based financial aid, right? Let me say another thing about need-based before I start talking about merit. Need-based aid is not binary, and hopefully you got that understanding. And what does that mean? It's not binary. It's not I will get need-based aid or I won't, right? At some schools, like going back to our example, at some schools, this family, for example, at Boston University, right? They're going to get $50,000, $60,000 in grant money, right? Need-based financial aid, right? You can see it here. It costs $86,000. You click on BU, right? So for this family, how much are they going to get? They're going to get $57,000 in need-based financial aid, right? So they're going to get a ton of grant money at BU. But what I mean by it's not binary is that at Penn State, they're not going to get anything. Penn State's not going to give them a dime. So a lot of times I have families that come to me and say, I had an older son or daughter, or I don't think I'm going to get anything. And you may be right at some schools, right? I'm not going to get any need-based aid. And you may be right at some schools, but that might not be at all. So again, just trying to hammer home the point, it's very family specific, and then it's very school specific, right? So you may receive tens of thousands of dollars in need-based aid at one school and $0 of need-based aid at another. Okay, so again, thus far, primarily need-based financial aid, right? And that should be your starting point, quite honestly, to understand where you are, because the EFC to a large degree really will determine your best strategy for finding value. Now, I'm sure there's plenty of you guys out here tonight who will watch this recording that no matter what you do, just based on your income and assets alone, you're not going to get any need-based aid at any school in the country, right? So if your EFC is hypothetically $100,000, you're not going to qualify for any need-based financial aid, right? So step one is understand that, right? Know that, right? For better or worse, you want to understand that you're not going to get any need-based aid. And again, don't disqualify yourself because you think you might be making too much. Run the numbers, right? So if you're not going to get any need-based aid, then you have to shift your focus. And you have to say, all right, our family's not going to qualify for any need-based aid. We don't want to pay $85,000 a year, but we can't pay $85,000 a year. Now what? Then the focus has to be merit money, right? Merit scholarships. So the first is understand what your EFC is. If your EFC is too high, then okay, now we're going for merit. The next piece of that is understanding that not every school gives merit money. Columbia, Princeton, Amherst, Bowdoin, right? You cannot get a merit scholarship at those colleges. They don't exist. Schools like Duke and Hopkins and BC and Notre Dame, technically they have merit, right? But they give merit to 1 to 2% of their admitted students. So for all, and that also includes athletes, right? So for all intents and purposes, those schools really don't have merit, right? Villanova, very popular school, they give merit to less than 5% of their admitted students. And part of that 5% also of merit money also includes a need component, right? So again, if you're not gonna qualify for need-based aid, you're gonna shoot for merit. Now it becomes, okay, what schools actually give merit, right? That's the next step. And again, not to toot our own horn, but I'm gonna, that's where the software is a beautiful thing, right? So you could come down here, right? And you can go to, so Syracuse is a rare school that gives both merit and need, right? So you come to Syracuse and you see, okay, here's the financial aid profile. They meet 97% of need-based financial aid, right? Very strong. But they also give merit aid to over 25% of their admitted students, right? And then you come down here and you can see the different levels of merit awards that potentially exist at Syracuse, right? So again, guys, this is what I call a front-end process, right? Meaning what schools you apply to are going to be the largest determinant of how much you actually end up paying, right? And again, it's all about understanding where your family is and the schools that you're interested in. How do they do business, right? Do they give need? Do they give merit? And if they give merit, what are the expectations there, right? Again, here, number 4, it's a school by school basis, right? Some are much more generous than others. And then the 5th component to this, kind of down the road, is you want to apply to competing schools. Both Fairfield, Sacred Heart, Quinnipiac, right? Those 3 schools, they're all competing with each other, right? Direct competition. They're all after the same type of student. All 3 of them give merit. If you get $25,000 at Fairfield, but Sacred Heart's your top choice and they only give you 20, you could absolutely use that Fairfield merit award to go back Sacred Heart as leverage down the road, right? So you want to try to put that school list together and build in some natural competition, right? And again, look, just because they're telling you, you don't have to pay $85,000. You can always find a discount, but you have to understand what schools to apply to. That's the name of the game, right? Again, specifically, if you're not going to get any merit, if you're not going to get any need-based aid, you got to apply to schools that will give your son or daughter merit. And then I also always recommend having at least a few value schools, right? And obviously you guys are in Cranford, New Jersey. You have the Rutgers, obviously, is a value. Rutgers is not going to give you anything. If you make more than $100,000, you're not going to get anything at Rutgers. It's going to cost you whatever it is now, 38 or thereabouts, but 38.40 is better than 75.80, right? But that doesn't necessarily mean that you have to stay in state. Your son or daughter wants to go out of state. I'll give you a great example. We have James Madison here down in Virginia. We have a ton of clients apply there and attend James Madison, a great business program. I actually unknowingly applied and went to a value school, right? University of Florida, go Gators. When I went to college, out-of-state University of Florida was basically the same price as in-state Rutgers, right? So I didn't know what they call it at the time, but that was basically a value school, right? So Florida didn't give me anything, but it was a manageable number. Right? You want to look for schools that are on the lower end of the tuition spectrum. And here's the other thing. Your son or daughter is going to apply to 8, 10, 12, 15, probably on the high end, but they're going to apply to a bunch of schools, right? Probably a dozen is probably the average. So it doesn't have to be all need, all merit, all value, right? You want to mix and match and build a smart list, both from an admissions perspective, but also from a financial perspective, right? And for a second, let me jump on the soapbox. College is the only, and again, when you send your son or daughter to college, you're purchasing a product, right? Believe it or not. But college is the only thing where we buy it, right? And we agree to purchase it without understanding the cost, right? And I always use the analogy, imagine you go to buy a house and you sit down at the closing and you say, Mr. and Mrs. Lawyer, I'm about to buy this house. How much is it going to cost me? Seems crazy. But that's what we're doing with college, right? We're picking schools without having any idea of how much they're actually going to cost our family. So what we're encouraging you all to do, and as a junior, as a parent of a junior, you have the time now, and hopefully we're giving you the resources to be able to start to understand those costs. And look, at the end of the day, you guys are going to make whatever is the best decision for your family, but don't go into the process blind, right? Be an educated consumer, right? Cannot stress that enough. And then the last piece here to the value schools. So again, let's say you have a $100,000 EFC, but your son is looking at Harvard and Yale and Princeton and Duke. You're not going to get any aid from them, right? They're all going to cost you $85,000 a year because your EFC exceeds the cost of attendance, and those schools only give need-based financial aid. What I encourage you to do then, especially with a really competitive student academically, is look at some public school honors programs, right? The Maryland Public School Honors Program, Vermont, James Madison, right? The big University of Alabama, University of Florida State, the big public school honors programs. South Carolina has a great example. And what time we got? Yeah. I always run these long. It's supposed to be an hour, but I didn't tell you at the outset. But real quick story, public school honors program. I had a kid, I guess we're going 4 years back now. His dream school was Brown. I hear that all the time, dream school, dream school. My kid gets into a dream school, I'm sending them, you're perfectly entitled to that. But in this scenario, I was working with this family and the kid's dream school was Brown, right? So firstly, we don't know if he's getting into Brown, right? Super competitive. Secondly, what we did know was that if he got into Brown, at that time it was only 60 grand, right? If he got into Brown, this family wasn't getting a dime, right? So it was going to cost them $240,000 over 4 years. By the time they were done borrowing, it was going to be upwards of $3,300,000 that they were going to pay to send this kid to Brown. We said, listen, apply to Brown. We don't know if we're going to get in. We'll see if we get in. But in the meantime, let's make a smart list and let's apply to some really strong programs, but strong programs that are actually going to give you money and provide a value. And at the end of the day, you sit down, you evaluate, and you make a decision. So long story short, he gets into Brown. Unbelievable. We know what the cost is going to be. Didn't give him a dime. We knew that going in. He also applied to University of South Carolina, right? This kid was a business kid. South Carolina has a tremendous international business program. They were trying to pull kids from the north. This was a New York kid. They gave him invitation to the honors program, which comes with a lot of perks, better dorms, selection of classes, special projects, etc., study abroad, grants. With that, they gave him what they call an out-of-state offset, right? Basically meaning he was paying in-state tuition. So at the end of the day, he was choosing between $60,000 a year Brown, which is going to cost $300,000 over 4 years when the time they were done paying interest, or $20,000 a year South Carolina, where the parents basically said, listen, we can't do Brown for 60. Maybe we'll get you a year and a half, but we can cover 4 years of South Carolina and you can graduate debt free. And so this kid basically chose South Carolina, made a business decision, right? Smart kid. And he went to South Carolina, didn't have to take out any debts and got a great international business education, right? He's doing phenomenally well. So listen, that might not be the right choice for every family, but this family gave himself options, right? And I really encourage you to do that. And you can't give yourself options in April of senior year, right? It starts now with educating yourself and your family and your son or daughter about what schools you're looking at, how do they do business, how will they do business for your family, and putting yourself in a position to understand those costs. And then applying those schools that will actually give you the money. All right, off the soapbox. Here we go. All right, what is this one? All right, so like we talked about, merit-based aid, right? So merit-based aid, obviously, like we talked about, and again, pretty intuitive, based on the student's academic profile, GPA. Again, most schools are test optional, not as many as before. Some schools are going back to test requires, but most schools are still test optional. And again, what is a merit award? It's a financial incentive to attend the school. Most merit awards are given to applying freshmen, right? To applying or seniors in high school, applying to the school, and they're almost always good for 4 years, right? So they'll give you over 4 years. And regardless of change in finances, merit awards don't change, right? Merit awards do not change. And again, different awarding methodologies, different schools do business differently, right? You have to start to understand that grasp. And so here are, I'll get to that in a second. All right, so again, need-based aid versus merit-based aid. And obviously, this is just a very small sampling. But on the right-hand side, you have schools that are predominantly need-based aid, if not exclusively, right? Harvard, MIT, exclusively need-based financial aid. Notre Dame, Northwestern. Can you get a merit award? Yeah, they play Division I athletics, right? But they basically don't give any merit awards, right? It's literally less than 1% of their admitted students. For all intent and purposes, they're 100% need-based aid, right? And only need-based aid. So if your family has an EFC of $100,000, all 4 of these schools on the right, you're paying full price. That's what's going to happen, right? You know that going in. Now, if your EFC has an EFC of $20,000, these schools are tremendous discounts, right? Tremendous discounts because they all meet 100% of need-based aid. Right. And then on the left, just because your EFC is $100,000 doesn't mean you have to pay $85,000 a year. right? You could always find a merit award. Willamette out in the Pacific Northwest, Case Western, Excellent Engineering School, Denison, and University of Alabama, especially the last couple of years, given a ton of money to Northeast kids, right? I talked to a mom today, basically paying room and board at Alabama this year, right? For her senior daughter going to school in the fall at Alabama, Roll Tide. But again, it's very school specific, right? This whole process. Does ED impact financial aid? No, it does not impact financial aid. Your financial aid is predicated on one thing. What is your EFC? It's the only thing that matters, right? Financial aid is predicated on what is your EFC? It's the only thing that matters, right? Does ED affect admissions possibilities? Absolutely. And especially in the last 3 or 4 years since COVID, ED admissions rates have gone through the roof. And if you're thinking about applying ED, it's even more important that you understand how much a potential school can give you, right? It's even more important, right? Because you're basically saying, if I get in, I'm going. So if you're going to make a commitment, I strongly recommend not making it blind financially, right? And again, hopefully we're giving you the tools and resources to be able to understand that and tackle that. All right. All right, so how do you actually apply? Again, guys, as a class of 2024, you're not actually going to do this until October of senior year, right? So you can't, even if you wanted to do it now, you can't, right? The application does not become available until October 1, 2023 for the class of 24, right? Now, very important, don't miss a deadline. Don't miss a deadline. There are no universal deadlines. There's no such thing as a FAFSA deadline. It is what is the deadline for the FAFSA at the schools I'm applying at. Yeah, it's very school specific. And again, no schools are alike. It's on you to know who needs what by when. And I always tell the story, not always, it just happened last year, but all last fall, I told the story. Last spring, in April of 22, family called me, kid got into NYU, right? Tough school to get into, right? What do they admit? 7% of their students. Kid gets into NYU. They did the FAFSA. They got the Pell Grant, which means they have a low income, right? They didn't know about the CSS profile. They didn't know they had to do it. They didn't do the CS profile at NYU. They missed the deadline. NYU said, we can't help you. We're not going to give you any of our institutional grant money. This is a family that legitimately should have got $65,000 in grant money from NYU, which they would have gave to them, but they didn't submit the proper, they didn't do the CSS profile, right? There was nothing we could do. Unfortunate, very unfortunate. Don't be an unfortunate case, right? It's up to you to know who needs what by when. So like we talked about, most of you probably heard of the FAFSA, right? Available October 1st. There's the website. Base income year we talked about for the class of 24 is going to be 2022, right? They used a prior year. And again, we'll hit it again. Don't miss deadlines, right? Deadlines are paramount. Don't miss a deadline. Don't give a school a reason to justify giving you less money. Common mistakes. All right, we talked a lot about a lot of these already, right? Retirement savings that does not go on the FAFSA, right? We talked about that in assets. Your primary home does not go on the FAFSA. We talked about that. Business value, right? Business value. So on the FAFSA, I mentioned earlier, when it comes to assets, the FAFSA asks for 3 boxes: checking, savings, investments, and then it asks for the value of your business. If you have less than 100 employees, it is 0. Right? It's automatic 0 on the FAFSA. Okay. 529 accounts, everyone knows by now, parent assets, right? Parent assets, not student assets. They are owned by the parent. Grandparent 529s. If you have a grandparent 529, is that on here? It's not. Grandparent 529s, right? Grandma or grandpa has a 529 with the kid as a beneficiary. Does not go on the FAFSA. Right? It is the asset of the grandparent, not mom or dad. It does not go on the FAFSA, right? So if you have a 529 in grandma, grandpa, or uncle, or auntie's name, that's an ideal place for it because you're basically taking it off the table. Work study, click yes. And again, we'll do this again when you get closer to the FAFSA. But yes, it's a part-time on-campus job. You could always say no to it. And again, the EFC, hopefully I've drilled this point home, how important the EFC is, but it does not mean that's all you're going to pay, right? It matters per college. Again, I showed you the example. BU is giving this family $57,000 in grant money. Penn State's giving them 0, right? So the EFC does not mean that that's all you're going to pay at a particular school. It's a school by school process, right? Don't miss deadlines. Although I might miss our hour deadline for this webinar. I hope you guys don't mind. So the FAFSA, like I said, most of you have probably heard of. Then we have the CSS profile, right? Question. Yeah, both 529s. All right, good question. So I have two kids. I have two 529s. Yes. Short answer is yes. Here's why. Because it's very easy to change the beneficiary of the 529. So the college basically says all the 529 money for you as a parent, we're going to count as the kid that's applying's asset, or as your asset, as a resource to pay for this kid. If that is the case, that's an appealable issue, right? Say whatever, you have 100 grand, 50 for each kid. Go back to them after the fact and say, listen, because look, what the financial aid applications are doing is assessing your family's resources to pay for college. Then you can make the argument that actually is not a resource that's available to pay for college. But by rule, yes, you're supposed to report both. Again, most of you probably heard of the FAFSA, CSS profile, 200 schools in the country required. If it requires it, make sure you do it. If you don't, you're not going to get anything. Going back to my NYU story, it's much more complex. It's much more invasive, right? The FAFSA, and they're simplifying the FAFSA. I'll talk about the changes in a second. The FAFSA is pretty straightforward. The CSS is not. It's much more intense. It's a double-edged sword to that. CSS is much more invasive. However, the schools that require it, usually, not always, Emerson, terrible, usually schools that require the CSS are much more generous with financial aid. Again, not always the case. I'll point out Emerson, they stink, at least relative to their competitors or their peers. Divorce and separated situations. Divorce and separated. This is, guys, if you're in a divorce separated situation, I reckon it's complicated, and I recommend setting up an appointment, speak to me. But basically, you can take advantage of being in a divorce separated situation. The first thing that you got to know in a divorce separated situation, the legality of the divorce separated doesn't matter, right? Whether you're divorced legally or informally separated, it doesn't matter. The standard is, for financial aid purposes, are both biological parents maintaining separate households, right? That's the standard. If that's the case, you fall in the divorce separated bucket for financial aid purposes. If you are in this bucket, because only one parent fills out the FAFSA, right? Only one parent fills out the FAFSA, and both parents have to fill out the CSS profile, right? I'm not going to do it justice, the complexities, but quite honestly, you can take advantage of that. If you want to learn more, let me know. And then business owners, how do you evaluate your business? Again, on the FAFSA, it's 0, but on the CSS profile, they're going to ask for much more detailed information for business owners, percent of ownership, address, cash on hand, valuations. So it's much more complex for business owners with the CSS profile as well. So CSS profile is a double-edged sword. Like I said, the schools that require it normally are much more generous, but it's also much more invasive. And how you fill that out is vitally important. Yeah, just running through this quick. And so I'm not going to go through all these with the CSS, but I recommend coming back in the fall when it's time to sit down and actually do these when you have it in front of you. These will make a lot more sense. But you have the list here. And again, you'll get the slides and the recording so you can go through them. You got some people bailing. I get it 100%, but we'll be done soon. All right. Very important. Very important. And for most of these, unfortunate, but you guys, as the class of 2024, are the first year that there's some significant FAFSA rules changing, right? Significant. For a handful of them, the pros, you can see they work in your favor. Just simplifying the FAFSA, okay, whatever. Child support's treated a little bit differently. The main pro is pre-tax, right? So if you're a cop or firefighter, you get disability or any workman's comp disability, that's off the table, right? That income is not a factor. If you have 401k or 403b contributions come out of your check pre-tax, that is no longer on the table, right? Which is a significant rule. The biggest con, right? And we've been preaching about this, it stinks. But the biggest con is that multiple kids in college will no longer receive a discount, right? So how it works now is if you have a $100,000 EFC, I'll make it, say you have a $50,000 EFC, right? And your kid goes to UPenn, you're getting $30,000 in grant money, right? Now you have two kids in college, that 50,000, they say, okay, we still expect you as a family to come up with 50, but we're going to split it. Half goes to one kid, half goes to the other, right? So now your $50,000 EFC just became 25,000, right? You're going to get 25,000 more in grant money for that kid at UPenn. However, that rule is changing, unfortunately, right? You're no longer going to get that split EFC from the federal level. All right. It's ridiculous that they're changing the rule. It's not fair. It stinks. Seriously, write your congressman, but understand it if you fall into this bucket. However, like most of this process, there is some nuance around this. Some schools will still honor that split, right? Let me show you a quick example. So I made up a second scenario here. I just want to show you quick the numbers. So you can see these are the same numbers. So it's 25 and 30, right? Going to this one. This one, okay, so now I have two kids in college. This federal EFC still stays the same. I don't get the split from the FAFSA, but a lot of these schools that require the CSS profile will still honor that split, we believe. We're not positive yet because it hasn't taken effect, but that's our expectation. So you're going to hear again and again from us as well that the FAFSA rule is changing. You're not going to get credit for two kids in college. However, depending on what school you apply to and what school they go to, it's possible that you still may get the credit for that, right? It's crazy that they're changing the rule. It's not fair, 100%, but it's possible that you still can benefit from it, right? Again, like a lot of this, you have to understand how it works and the schools that you're looking at, how do they do business? To that point, we've created a change.org. And again, you're going to get these links, and I hope you're going to get the slides and you can follow the link, but share it, opposing the chat changes coming. Specifically that split EFC, right? It's crazy that they're doing that. It's going to cost a lot of families a lot of money and paying more in college. We're supposed to be doing the opposite as a country, but this change is going to have a dramatic effect on a lot of families. And hopefully they don't implement it, but as of now, starting in October, they're going to. We ask that you jump in there and sign, and seriously, call your congressman. Okay, quick timeline. And really, this is what the class of 23 is going through right now. So you can understand when this applies, right? You can appeal your award. Once you get your financial aid package, you can appeal. How do you do it? Here's a 5-6-step process on how to actually go about doing it. Firstly, you got to wait till you get an award. You can't appeal something you don't have yet, right? So the kid has to get admitted. They get their award. How do you do it? You basically got to write a letter, right? Or jump on a phone, write an email, bring some color, bring some background to your story. You know, what I call put a face to a name, right? Your file's in the financial aid office. They have no idea, you know, who your son or daughter is. They have no idea it's your kid's dream school, right? All they know is the numbers, right? They're looking at your FAFSA, your CS profile, your tax return. They don't know anything about you. Put a face to a name. This is also where you can bring some mitigating circumstances into account, right? If you care for an elderly parent, you have significant medical expenses or some that you want the college to be aware of, here's your opportunity to let them know. Ask for a specific amount and show awards offered by other colleges, right? I mentioned that earlier. Sacred Heart and Fairfield, play them against each other, right? You say, Sacred Heart, you're a number one choice. Fairfield offered us $5,000 more. Can you match that? Just FYI, if a school says they don't consider awards by other colleges, nonsense, of course they do. Be persistent, right? Be persistent. Essentially, don't take no for an answer. Keep going back to them and keep asking for more. You have till May 1st of senior year to make a decision, so you have plenty of time to keep engaging them. Last year at Syracuse, tricky situation. Had a client, we kept going back. We felt like they were misinterpreting the financial aid applications. They were misreading the tax returns. We kept going back, kept making the point. We got told no 3 times. We went up the ladder with the director of financial aid. They offered this family $25,000 in grant money, right? At Syracuse, basically allowed the kid to go there. Why? Because we didn't take the first no. We were persistent and continued to ask, and it wound up being a huge, it's $100,000 swing, tremendous amount of money. And for the most part, you want to have the student lead the charge. There's some variables to that. If it's specifically financial, maybe not, but most times they want to know that the student wants to go to that school and they're interested and invested. So you want to have it be student-led, student-driven. All right, so now what, right? Now what? All right, we just sat through an hour of Matt talking. We're good. We're ready. We're ready to roll. We'll see you in October. I wouldn't recommend that. You certainly can do that, but I absolutely wouldn't recommend it. Hopefully, if I did my job here correctly tonight, you have a much better understanding of how the process works. And really, I'm going to give you some tools right now to help you navigate, right, the next 5, 6, 7 months. And I can't stress enough, guys, what schools you apply to is the biggest factor in how much you're going to pay. Right? You want to understand that, and you want to be able to put yourself in a position to get significant discount. Again, you guys all get this link tomorrow, but I'll just show you real quick. I don't know what's up with my camera. So look, we basically put people in a couple different buckets. We have the DIY, right? Do it yourself. You just need a little extra support. A lot of resources here. Start with the MyCap software. We have office hours every other Monday. It's a Facebook group and YouTube channels hitting on all the pertinent topics. The next step up, you can upgrade your MyCap. Make sure you use this coupon code for tonight, Cranford 15. So an hour session with a financial aid expert to address any specifics that you may have and to begin to navigate this process. And then for the folks that say, listen, I don't have the time, I don't have the ability, I want to make sure this is done perfectly and put myself in the best position possible, we have our Wake Me When It's Over. Obviously a different price point, but this kind of entitles you to one-on-one support as you go through the entire process, myself or another expert, and make sure that you put yourself in the best position possible. You get all these links tomorrow. You can check it out. If you have any questions related to the Wake Me When It's Over, really anything, you can book a free 15-minute conference. If you're not sure where you are, where do you belong? Are you DIYer? Are you Wake Me When It's Over? Are you in between? Book a free consultation. We'll explain to you, explain your situation, and point you in the right direction. All right? So like I said, everyone here will get an email tomorrow with this link, with the resources. And I really want to encourage you guys to continue the educational process. Don't bury your head in the sand and say, all right, I'm good till October, right? This is the time where you want to plan out and really put together a smart list and a smart list of schools that is going to make sure that your son or daughter, here's the goal, get them to a great school that they're super excited about, but for a great price, right? And marrying those two things together, that's the hardest part of the process for every family. But every family is going to have a different strategy to get there, right? So you want to make sure that you're understanding where you guys are as a family and make sure that you're interested in applying to the schools that are going to give you a great bang for your buck. Right? Thank you guys very much for coming out tonight. Eye-opening. All right, great. So that's all I have tonight. Again, look out for this email. If you don't get it or you have any questions, feel free to go to the website, hit us up in the chat box, and consider us a resource as you move forward. Hope to talk to a few of you moving down the road. And big shout out, Cranford's Guidance Department. You guys are tremendous. Thank you once again for having us. And hopefully you guys all learned a lot tonight. And this kind of kickstarts your college search process. And again, the finances don't have to be the end all be all of your decision making, but they should be a component of it, right? And we're really urging you to use the resources and be an educated consumer as you, your son, your daughter navigate this process. Right? All right, guys. Thank you very much. Really appreciate all of you. Everybody, have a great night. Take care.